Initial jobless claims dropped for the third consecutive week, and stocks erupted higher. In fact, the S&P 500 closed basically at the highs of the day and hitting yet another all-time high. I think I saw something on Twitter today that said it was the 47th all-time high that it has hit just this year in 2021. So great year for the bulls, has continued on even through the traditionally slow summer months. So we'll take a look at all that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a consumer staples company that I had never heard of before last night, but it's starting to break out on the chart, so we'll give it a shot. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee, and it's August 12th, 2021. First of all, if you're new, remember to go over to YouTube, click subscribe on our channel, then go down to our description area to sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ. I would encourage you to follow me if you're not doing so already, and we really appreciate those of you that click like and retweet on those Market Outlook related tweets. And then last but not least, we do have a presence on Facebook as well. Feel free to join us at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, I've got the heat map of the Market Scholars 1000 here, so we can kind of get a sense as to what the big movers were individually within the market before we advance our thoughts to the indices. Now remember how you read this, the darker shade of greens would be the bigger performers to the upside, and then the darker shades of pink would be the bigger performers to the downside, or the biggest losers, however you want to say that. So in terms of some of our big winners today, we did have Palantir, one of the more recent IPOs, has been around since last fall. It was up about 11% today. That stock's been mostly traveling sideways in recent months, so today kind of gave it a little bit of life there, but still trading well below the highs that it was trading at earlier this year. But nice 11% jump out of Palantir. We also had a big move out of Cooper Companies. I believe that's a contact lens company. I think they won a contract out of China here today. They're up about 7 or 8% today, so a nice mover there. We did see that Novavax, somewhat involved in the vaccine news, they're up 5% here today. And we saw DraftKings up nearly 5% today, noticing a few more deals taking place in the sports gambling area as we kind of gear up towards the NFL season kicking off here in a few weeks. And then there's also a little green patch down below here. That's Open Door Technologies. That was a big move there, up 24%. That's a recent SPAC, one of those companies that will buy your house from you sight unseen, and hopefully they're making good decisions for their shareholders when they do that. But today, that stock was applauded, but like a lot of SPACs, that one has been down significantly in recent months. So a little bit of life there, back to it. Now, in terms of some of the downside movers, you can see some of those Chinese stocks were down today. Baidu reported earnings. They were down about 3%. Alibaba was down 1.6%. Pinduoduo, JD, they were all down as well. So continued house of pain there for the Chinese companies. We do have IQE, which is another Chinese company, as a matter of fact, ticker symbol IQ. It was down about 7% today. So there seems to be a theme there. We're not quite out of the bad news from China, apparently. We also had Micron here in the United States doing pretty poorly. It was down about 6%. We also saw Rio Tinto, which is a foreign metals and mining type of a company. It was down about 6%. So that gives you a little bit of a feel as to where some of the bigger movements were here today. Let's take a look at things now on the traditional foregrid. And as we pull this up here, we'll hone our attention on what I mentioned in the intro, which is right here in the upper left. What an amazing day there for the S&P 500. Now, it wasn't the most spectacular move higher. It was only up 0.30%, but considering we've been hitting new all-time highs almost daily here recently, the fact that we continue to coast higher and close basically right near the high of the session here today is a good sign. As kind of mentioned in the presentation for you guys on Tuesday, if you just think about it from the basic perspective of anybody who's ever bought the S&P 500 index fund or something like SPY, Any person who's bought those products at all in the history of that index, if they're still holding them today, they're making money. There's nobody out there that's losing money by holding those very basic investment products. So remember, we enjoy taking individual trades plenty of times, but if you're somebody that doesn't have the desire to do that, there's nothing wrong with just investing in index funds as well. We've had a good run of things here in the United States in terms of valuations and earnings improvement over the years, and that has rewarded shareholders more times than not. So great to see that the bull market is alive and well. S&P 500 new all-time highs. Not to be too much outdone, we saw the Dow Jones Industrial Average also hit a new all-time high. Now you'll notice it was only up 0.04%, so it wasn't up nearly as much as the S&P 500. Nonetheless, that venerable large cap or mega cap index continues to plow higher and higher. A lot of those big banks starting to make moves here. Talked a lot about that in my question and answer session for my premium members here today. Stocks like Morgan Stanley and Goldman Sachs and the like making some pretty decent moves here recently, and that whole sector has moved up very, very quickly within the sector selector tool that I use as well. On the two charts on the bottom now, we see the Nasdaq Composite was up 0.35%, so it was actually considered our leader today. But unlike the S&P 500, we're still a little bit a ways from their previous high. That happened to occur on, looks like it was August 5th here. So last 2 days, NASDAQ has been down, whereas the last 2 days, the S&P 500 has gone up. So even though the NASDAQ was up slightly more than the S&P 500 today, the S&P 500 appears to be a bit stronger in its leadership role at this moment in time. Remember, another way to judge that is by looking at these labels you see when David and I are showing you these charts on the YouTube video. You'll notice here that the intermediate line on the S&P 500 is at 97.73 right now, slightly more than the intermediate line on the Dow Jones Industrial Average of 96.99, and both of those are larger than what we see down below with the Nasdaq Composite at 88.38. So obviously, there's a number of ways you can go about the process of determining who's strongest and who's weakest or what have you, but that would be kind of a cheat code of sorts to kind of get you in the right direction there. So judging by that philosophy, the S&P 500 is our leader right now. But it was nice to see the Nasdaq Composite bounce up and off of its rising moving average. And then last but not least, we've got the Russell 2000 in the lower right-hand corner here. And as mentioned on Tuesday, the big news that day was that we flipped to a strongly bullish posture, and we hadn't had that since going back here to basically late June previously. So the last 2 days, it's held its own. It was down today, so just to put that on record, it was down 0.28% today, but it did go up nicely yesterday. So you can see here that it is continuing to trade above its moving average. But unlike the other three indices, the Russell 2000 has a downward trending 30-day moving average. So its chart doesn't look nearly as strong as the others at this exact moment in time. But who knows? Maybe it can play a little bit of catch up here as we move forward. In the end, you can see that all four of our charts do have strongly bullish postures, and all of them are now trading above their moving averages, with the Russell 2000 being the only one whose moving average is not going higher. All right, let's go ahead, take a look at our next chart. This will be our 3 green arrows chart, 4D, for those of you playing along at home. And as you can see, we do have 3 out of our 4 charts with a 3 green arrows signal. Chart number 1 is the S&P 500, chart number 2 is the Dow Jones Industrial Average, and chart number 3 is the Russell 2000. So some good performances there recently has brought some of those momentum-oriented indicators back into the possession of the bulls. Whereas over here, you can see on the Nasdaq Composite, we're kind of holding out with that MACD histogram. What that is saying is that momentum is rolling over just a little bit here, and you can see that's actually playing out in front of our eyes as that particular chart is just kind of stalling out sideways. But it's above that moving average, so I don't think it's time to count it down and out for good. It just means that it's taking a little bit of a breather for this moment in time while it tries to figure out where it's going next. So anyway, looks like we're in pretty good shape from this particular chart as well. Let's go ahead and take a look now at our 1040 crossover method. And as you can see here, we've got green backgrounds on this chart 4C, and that means that we do have golden crosses on all 4 of these charts. These are longer term charts. They're about 3 years in length apiece. Each one of the candles is 1 week in length. The orange lines are the 10-week moving averages, and the blue lines are the 40-period moving average, or 40-week moving average. So when the 10-week is above the 40-week, as is the case with all 4 of these charts, we generally suggest that the longer-term postures or the longer-term mindset remains bullish for the time being. But of course, if that changes, and when it changes, remember, it will change. It kind of feels sometimes like these last for many, many months, and that is true. It can happen that way because they're not all that sensitive of signals. But eventually it will change. And when it does, we'll, of course, alert you to that here in the Market Outlook video. All right, let me go ahead and pop on over to the internet briefly. I always like to get a chance to say thank you to all of you who help support us here, especially on social media. In particular, I tend to spend most of my time on social media over at Twitter as opposed to some of the other areas. But any way you can help promote Market Scholars, we certainly appreciate that. So the last time I did the video on Tuesday, 106 of you came out and clicked like for me there. As I always say, as long as we're getting at least triple-digit likes, it's worth our time to do these videos. If we're getting less than that, then we really have to kind of think hard about whether we're getting any usefulness out of the video, right? We don't want to waste your time, and hopefully you're not wasting ours, right? Hopefully this is a symbiotic relationship where you support our business, we support you with education on a daily basis. So thank you to all of you that did say or did click like for us: Aaron and Jayesh and Domina and Ann and Kirk and Paul, Prickly Trader. We've got Dave and Ken, Gerald, Lloyd, Greg, Ray, Carl, Rick, and the list goes on and on and on. Lots of wonderful market scholars and others on this list. So thank you so much. That goes a long way to helping support this project here for us. Also, as I mentioned before, I did teach my question and answer session earlier today. So if you're looking for that, let me go ahead and refresh our calendar here so that way you can see that it should be recorded. Yep. So the recording has been posted to our calendar. If you want to check that out, you're welcome to do so. Remember that if you're a premium member, you have access to that particular class, and it's kind of an Ask Me Anything type of a class where it allows you to kind of pick my brain, and David holds his on Saturday morning, so you can do the same thing for him. But today we had another conversation about the CRISPR stocks, in particular Editas, which is just absolutely ripped higher. Stock is up like 20 or 30 bucks in just a couple of weeks. We also had a question about Caribou, which is another one of those CRISPR stocks. We had a question about Phillips 66 as a dividend growth investing candidate. We had a question about CubeSmart, which is kind of a self-storage REIT from a top-down trend trading perspective. We went over some ratios for dividend analysis, including the dividend coverage ratio, the free cash flow to equity ratio, and the debt or the net debt to EBITDA ratio. And then I had a question on Investors Bancorp as a dividend growth investing candidate as well. So feel free to check that out later on tonight or this weekend if you get an opportunity and you're a premium member of Market Scholars. David taught his portfolio management with ETFs class earlier today. And tomorrow he'll be teaching his very popular technical analysis class. So make sure you're checking that out as well. All right, let's go ahead and get back on track here with our charts. And let's go ahead and do some 12 grid analysis, starting with chart 5A. Now, as we're looking at this, a reminder that these background colors will change depending upon what the posture is. Now, we have a kind of an oddball situation, I see, as this gets pulled up right now. With oil down here, when you see a white background like that, it means that the intermediate line moved exactly sideways day over day. And it is quite a rarity when that happens. It's not really meaningful in one way or another. It's just in case you were curious why one of them all of a sudden here today is white, that's the reason behind it. Intermediate line on the market forecast stayed exactly at 41.21 for the second straight day. Otherwise, all these other charts do have those background colors, and the pink backgrounds are our bearish posture charts. The green background colors are the bullish posture charts according to the intermediate line on the market forecast technical indicator, which of course you can find over on the Thinkorswim platform. All right, so let's go through some analysis here, see what we can discover. Now, of course, the big story on Tuesday that we started with was the 10-year U.S. Treasury yield. And so down below here, you can see that interest rates were up yet again today. If you move that decimal point over to the left one, you'll know that we ended at 1.36% on the 10-year Treasury yield. Now, remember, when rates are rising, that is a benefit to financial companies, and it usually is a disadvantage for things like REITs and sometimes utilities and other kind of dividend-paying types of investments that might compete with bonds. And so in this particular case, this move in the last 7 or 8 sessions has been wonderful for a lot of those financial-oriented individual stocks that are out there. Now, of course, the flip side of having interest rates go up is bond prices themselves going down. And you can see that that relationship did hold true today. On the left-hand side here, as we're looking at the long-term U.S. Treasuries, it has crossed below that 30-day moving average and has been down quite significantly for the last, let's call it 6 sessions in a row. And so we'll see if that ends up bending that moving average over, or whether we can get a quick pop back higher here going forward. Part of it might be, how does the market interpret the economy? And if the economy is running hot, oftentimes interest rates will go up in response to that. And it kind of feels like that's where we're at right now. Whether that continues is anybody's guess. As you know, we're kind of grappling with the Delta variant from a coronavirus perspective and wondering if that has the potential of locking down certain parts of our economy and travel and things like that. So as always, we've got a number of challenges that we need to think about as investors, but nothing that we can't get through, right? That's the beauty of this business. If you work hard enough, you will find some opportunities out there. Now, when you're looking at some of these other charts, another big player in the macro sense is the US dollar. That's our chart in the lower left-hand corner here. And you can see that that remains bullish. We continue to trade above a rising 30-day moving average there. It was up a touch here today as well. That can have the possibility of pressuring commodities. Oil prices were down a touch today, but not dramatically. Oil prices have kind of been slumping over here more recently, right? We've got this high that was set on July 1st, slightly lower high on July 13th, and a slightly lower high yet again on July 29th. We do have a bit of coiling going on, however, because we had this low on July 20th and a slightly higher low there on August 9th. So when you have a situation like that where you can kind of see it both ways, in other words, a little bit of bearishness on the top, a little bit of bullishness on the bottom, then another way to kind of sort through all that is, well, what direction is the moving average going? And right now the moving average is tilted lower, as you can see here. And so the path of least resistance for right now does continue to be to the downside. It's also the case over here with gold. You can see that moving average is red over there. Gold had an up session, and it's actually been up for 3 sessions in a row, but we are still so far below some of these prior highs that, you know, we got a little bit of work to do before the bulls can come roaring back in gold. So just kind of biding its time down here, but definitely with a bit of a bearish posture, all things considered. Other areas of interest, I would say that Bitcoin fell a little bit here today. It had been doing quite well for the last 3 or 4 sessions. In fact, it's been doing well for the last 2 or 3 weeks. Today was a bit of a give back day there on Bitcoin. You can see it was down about 4%, but I am kind of more in the bullish camp on Bitcoin now. So I'd be looking for opportunities to maybe play a bullish bounce if you can find some stability in that chart in the coming days or weeks. Let's go ahead and take a look now at our sector analysis. And so for the sectors, we're going to use chart 5C. And as we pull this up here, you can see that it's mostly green. We've got a couple of exceptions to that. One of them is discretionary. Now remember, Amazon and Tesla and Home Depot play a very important role here in discretionary, simply because it's market cap weighted. So that could be part of the reason that's kind of just kind of stalling out here more recently, whereas some of the other discretionary stocks could be holding up a little bit better. And then we got real estate in the lower right-hand corner. Notice that it has a light pink background there as well. And this kind of goes back to what I had just mentioned a few minutes ago, which is with interest rates rising, we have a situation where the financial stocks are primed to benefit, and real estate investment trusts are going to struggle as kind of the opposite of that. And you can see that kind of playing out before our eyes. We had this conversation earlier today when I was answering that CubeSmart question for my students as well. So in this case, notice how real estate has really just tracked sideways for, let's call it, the last 2 weeks while the interest rate environment has gone up. So that's put pressure on its intermediate line, which has fallen out of the upper reversal zone and down to 78 right now, or 78. Remember, if you wanted to see the actual market forecast, you could just right click on that chart and go to maximize sell, and then down below you can kind of visualize that a little bit better. So notice that green line was in the upper reversal zone, has been for much of the last 3 months of this chart because this has been a really strong performer, but we've got a little bit of a change of temperature here in the last couple of days. We remain above a rising 30-day moving average, so we don't want to count it out quite yet, but we also want to understand that things aren't nearly as strong as you might think if you're looking underneath the hood a little bit. Here we go with that green line crossing below that upper reversal zone. Now it did so briefly back here as well on July 22nd on this candle, and you can see we were following that with 3 rally days to get us back into the upper reversal zone. So this is the type of thing where it's so close to the upper reversal zone, it's very precarious here, where you could have a posture change very quickly. In fact, as soon as tomorrow under the right types of circumstances. But it is true that on a relative basis, you are starting to see a little bit of slippage there with real estate, and it's being supplanted by the strength of financials, which is our chart in the upper rung, second from the left there. And again, I'm going to right click, I'm going to go to maximize sell, and you can see how this chart, which was once down and out so badly that the green line was actually in the low reversal zone back here at the end of June, has come roaring back. And just when you figured it would probably have a little bit of a resistance as it approached some of those old highs from the beginning of June, we've blasted right through there the last couple of sessions. So this is some really attractive and healthy price behavior we're seeing out of the financials. It's almost day after day after day. Remember, the dark background colors of these candlesticks will tell you whether we had an up day or not. So in this entire run, we had just one down day, that one right there. Otherwise, we had 1, 2, 3, 4, 5, 6, 7, 8 out of the last 9 trading sessions for the financials have been up. And remember, this is a broadly diversified group of companies, right? These are sometimes you have highly concentrated industries within various sectors. For instance, in real estate, you are highly concentrated within REITs. Financials are kind of a little bit more sprawling, where you've got banks and brokers and insurance companies and capital market stocks and consumer finance and some of the credit cards and all kinds of things going on there. So the fact that we've had this diversified group of financials all going up 8 out of 9 days has been quite the sight for sore eyes for those of you that have been waiting patiently for those types of stocks to make a move again. So all of a sudden, financials are exhibiting a bit of a leadership role. In fact, going back to that comment I'd made earlier about using the intermediate line to kind of determine who our leaders are, notice the intermediate line on financials is 97.54 right now. Remember, it only goes to 100. So in other words, we're knocking on the door of having some of the best strength you could from an intermediate perspective there with those financials. So a rather impressive move there, to say the least, there out of the financials. They were up a touch here today. In terms of the bigger movers here today, technology was up 0.57%. That's a little bit abnormal considering, remember when we were looking at the Nasdaq Composite here at the beginning of the presentation today, the Nasdaq was the only one out of them that was, no, I take that back. The Nasdaq was up. It was the Russell 2000 that was down, wasn't it? Let me just double check because I don't want to tell you the wrong information. Yeah, that's how it was. Okay. For a second there, I was flip-flopping those two in my mind. So this makes a lot more sense. I was thinking to myself, my goodness, how in the heck was technology one of the leaders within the market today if the NASDAQ wasn't following suit? Now, it's possible for that to happen. It's just highly unlikely. So it does kind of jive with what we're seeing over here for sure. We do have technology up 0.57% today. That was one of our bigger movers. The only other one that was bigger than it was healthcare. Healthcare was up 0.79%. And healthcare and technology remain very strong trends, kind of opposite ends of the corners there, but look at those trends. They continue roaring back time after time. In terms of who the losers were here today, we had a few of them that were in the red, but it looks like the worst performer was industrials. Remember, yesterday we got an overbought cluster signal on the industrials and selling off just a touch here today, kind of stalling out after having that nice move yesterday off of the infrastructure news and the day before. We also saw materials kind of pulling back for probably the same reason here, down 0.16% today. But for the most part, you look at these charts and you say, okay, makes sense. The market's bullish. Most of these charts are trending in the right direction. Let's go ahead and talk about our trade application example now. And before we get to it, I just wanted to point out that the consumer staples looks pretty decent, all things considered. So here's the consumer staples chart. You can see that we are trading near 3-month highs as it stands today. We were down just a touch here today, 0.06%, but obviously have that dark green background color, the green 30-day moving average. We actually have what's known as a bullish intermediate confirmation signal on the consumer staples here today with that red line in the lower reversal zone. At the same time, we've got bullishness out of the green line. However, the blue line isn't really where we would ideally want it to be, below 50. But it is technically a bullish intermediate confirmation signal there on the consumer staples, in addition to making very close to 3-month highs at this moment in time. So decent trend there. It's probably not a leadership group quite yet, but certainly not that far away at the same time. All right, so having said that, what I wanted to focus on now is, let's go ahead and pull up chart 4A. I wanted to show you a stock that I had never heard of before yesterday. Now maybe I'm out asleep on this one. Probably not the main customer of this company. Let's put it this way. The company's called the Beauty Health Company. So maybe some of you that are much more beautiful than I am are going to recognize this company a bit more. But I had never heard of this company yesterday, and I was just kind of flipping through a bunch of charts, and this one kind of crossed onto my desk, and thought, my goodness, what is this company? Where has it been? And I'm usually a guy that I keep very close tabs on the consumer staples areas, because I'm a dividend growth investor, and many of them are, of course, great dividend growers. This one, I think, is a bit of an up-and-coming company. It doesn't even pay a dividend yet, but nonetheless, it is part of that consumer staples area, probably makeup and eyeliner and mascara and all that kind of stuff. So maybe it competes with, Estee Lauder and the like. But I did like that move yesterday, a nice bounce up and a gap higher after they announced their earnings, and a little bit of a follow through on it here today. Now, if we kind of go back a little bit further in time, let's go on maybe a 1-year daily chart. You can kind of see that this stock was really stuck in the mud for quite some time, down here at around $10 per share. Once it broke out above 10, it went on a monstrous run until approximately here in the middle of June. Once it got to about 18, it seems like it's kind of just stalled out there. Now, for a second, it kind of looked like it was going to maybe put in a head and shoulders pattern, with this being the left shoulder, this being the head, and maybe this being the right shoulder. It looked like maybe it was going to break down, but it just wasn't in the cards. All of a sudden, after this big day right here where it looked like things were getting pretty ugly, we rallied back firmly. And then last week, we spent the full week hanging out just above that rising 30-day moving average until they reported their earnings, and then it just punched up and through that prior resistance area there. So who knows? Maybe after some consolidation in the last couple of months, maybe we get a big move out of this stock, similar to what we saw after it broke out of its last consolidation back here in kind of that April and May time period. So the way that I decided to play this was because it's a lesser known quantity. This is not a company that I would necessarily look for options trading on. They're probably not that liquid if they exist at all. And so I just opted to do another stock-based trade here in this case. It is a bullish swing trade where I'm buying it based upon the breakout of the prior resistance area. And also, of course, having that green background color telling us that we do have a strongly bullish posture on it using the market forecast as well. And I'm doing a one-for-one reward-risk relationship. And so I'm kind of doing a measuring technique where we were using kind of this area right here as the old high and this area down below here as the old low. So my expectation now that we're just barely crossing above that breakout zone is for us to have another measured move up here. So you're basically kind of right now in the middle of this line down below and this line up above. This line down below is where our stop loss would be. It's a little bit lower than where we were trading back on June 30th. And then our upside price target would be up here just a hair below 25 in this case. So this would have to be a continuation of this trend if we were to be successful with it. Of course, I sent out all those details to those of you when I placed the trade earlier today via Telegram app if you're a premium member of Market Scholar. So that way you can have that information before everybody else. We're up a little bit on the trade as it did close near its high of the session here today, just like the market itself did. So that's what I had for you here today. I hope you guys enjoy your weekend. I'm actually doing a little bit of a weekend trip myself. As I told my students earlier today in class, I am still planning on bringing my laptop with me and will try my best to get the sector selector and stock selector tools updated for you guys tomorrow night from my hotel room. If that doesn't happen for some reason, if I don't have the tools or if my hotel doesn't have good internet or something along those lines, then I'll just plan on getting those resources updated for you guys on Sunday night. But I will be back in class Monday morning for my 2 classes that day. So you guys enjoy the rest of your weekend as well. If you got value out of tonight's video, please click like for me there on Twitter. And I'll look forward to seeing you all next week. Take care, everybody. Bye-bye.